Going thing.
Hello everybody, welcome to my channel. Today we'll be talking about an interesting company in an interesting field. So the company is Majesco, ticker MJCO, and it's operating in the Insurtech industry. So it's pretty new, and then also the insurance industry has to evolve. And basically, this company presents a very interesting operating leverage business model that I want to share with you. So let's dive in. Basically, the business, they propose different products in the P&C, so it's like property and claim insurance, and also LNA, which is life insurance and annuity. They have two main products that they call the cloud insurer, and also the second one is called digital first insurance. Just to show you basically the number of customers that they have, at least for the P&C, which is property and claim insurance, and they have a very, very important number of them spreading between tier 1s and also tier 4 to tier 5. Also, because I'm not very expert into Insurtech company, I'm just relying on Gartner results. And basically, over the last years, Majesco has been improving a lot in terms of leadership in this industry. So you can see in 2016, basically, they were in these, let's say, niche players field. But at the moment now, from 2018, they entered into this leader quadrant with Duck Creek and Guidewire. Also in 2019, they confirmed their position as the top 3 leaders into this P&C core insurance platform for North America. So this is, let's say, a great validation, at least for me to be sure that I'm not investing in a fake company. Presentation that will follow is just based on the 3 main statements of the 10Qs. And after, I will give you like a summary card, which I call DNA card. And at the end, I will be giving you a conclusion and my point of view on this company. Just before this, we can just start looking at the technicals. So over the last 2 years, the company has been trading in a horizontal channel between $5 and $9. Obviously, the COVID crisis just made it drop, and at the moment, just we recovered a little bit at $7.5. So nothing to mention, crazy to mention here on the technical, but at least you know you are almost in the middle of the channel. Regarding income statement, so let's look at the revenue of the last 4 quarters. So basically, it didn't change too much, between $34 and $37 million. Operating profits, the same, also quite steady, between $16 and $20 million. And what is good is that the company, even though it's considered as a growing company, it's making profit. Now let's look at the margin. So the gross margin, basically same, very steady in the 50s. Operating margin, as you can see, took a hit compared to the gross margin, 4%. And the net margin follows quickly between 3 and 6% for the net margin. Here I will show you also the OPEX split. So basically, the cost of products is around this 50%, 30% for SG&A, and they spend a lot of this, let's say, revenue into research and development, which is good at least to secure future revenue and improving their products. And what is left is basically the net income. So when you look at this income statement, I don't feel excited about presenting this type of company. But basically, when you want to look at operating leverage, you need to take a bit of a zoom out and definitely not look only into the last 4 quarters. Okay? So the next slide I will show you basically is the most important one to basically identify operating leverage and how it will kick in. So let's go. So I will present you here the last 4 years, and then the gross profit, SG&A, and R&D and CapEx are the most important to identify operating leverage. So let's look at the gross profit. From 2016 to, let's say, today, TTM is trading 12 months. the gross profit went from, let's say, almost 50 to 70 million dollars, so increased by 20 million. Huh? But look now at the expenses, OPEX. SG&A basically was flat, around $40 million between 2016 and today, which means that, so I will show you then after the research and development, and it's the same basically for R&D. It went from, let's say, $16 million in 2016 up to $20 million today. I will show you also the CapEx, which is very, let's say, light in terms of investment for CapEx. Obviously, this is almost like a SaaS company, so basically the only, let's say, spending is mostly on the softwares. But basically, what I want to show you here is that this is where you identify the operating leverage. Why? Because the R&D only increased by 5 million, the SG&A increased maybe by also 5 million, but the gross profit increased by 20 million. So now imagine in the, let's say, coming years, if you continue having such like a steady, let's say, revenue growth and thus a gross profit growth, you will definitely kick in a lot more money into the bottom line. That's what I'm very interested in, and you can only see that if you take a bit of zoom out. And that's exactly what I want to share with you today, is that if you want to identify a company, look into the last few years of operation. I just added also a buyback here, or like debt payment, dividend, nope, dividend, and also I track the cash and a short-term investment to show that also the company has been increasing cash over the last 2 years. Now let's look at the balance sheet. The same, I want to show you here a dynamic view only for the last 4 quarters, but basically Q4 was here, Q3 was like this, and Q2, so that you can see like improvement or degradation of each of the items for the balance sheet. What is interesting here to see is look at all the liquidity that they have. Potentially, I like the fact that they have cash and sufficient cash, like 20 million. They also invest a lot into short-term, let's say, funding. What I don't like is to see the receivable increase, let's say from 35 to 41 over the last year. So this is definitely a point that you will need to look into the next quarter just to ensure that it's at least stable and not getting too big. Also, what I want to look at is basically the working capital, so all the short-term, all the liquidity minus the current liability, which give you here in the case for Majesco around $50 million, which is good. But also one very important point is the fact that they have no long-term debt. So it's a very clean balance sheet to me. Balanced, yes, very balanced. And also you can see based on this that the equity increase gradually quarter over quarter. Now let's look at the cash flow statement. So the same here, I extracted from the last 10 Ks, so the last yearly results. I extracted this and then I put it into a table so that you can digest it a little bit better. And what usually I show here is the 3 components of the of the table, which is operating cash flow, investing cash flow, and financing cash flow. What you can see is that probably on the last, let's say, 4 years, the company didn't generate a real like strong operating cash flow because it was in the growing phase. Okay. So also in 2019 they raised a lot of money, so that you can see here in the red section, and basically you can see that they raised money just by issuing a lot of stock. Okay, they used it also to pay back a little bit of debt, so that's why it's minus a negative value in 2019. And basically what they used here is they use this extra cash and then they put it directly into short-term investments. That's what you saw on the balance sheet, but actually here it's more obvious that basically they put $35 million working in short-term investments. What is interesting to see is also the last 3 months of 2020. Sorry, it's here. It's 2020, and they already generated a lot of operating cash flow. And this is something we will need to follow up in the coming year. But basically, I'm very happy with the situation. Also here, I just put the number of shares outstanding for the last 4 years. So the company has not been diluted too much to the shareholders. So that's quite good. Just this 18%, let's say, increase in shares was mainly to basically to raise money. Huh? The $44 million that you see here in the table. Okay. So here, yes, this is a detail for the other investing cash flow from the last thank you. So that's here where they put the short-term investment. They invested $28 million and also did the acquisition of Execs Holding, which they spent $7 million. So I think we're good for the cash flow statement. Now we can go on the DNA card, the most important, let's say, slide for me, which will give us the overall view. So the first thing we will be looking at free cash flow generation and basically try to calculate a yield return based on the free cash flow and enterprise value. Here, as you can see, the market cap for the today value of $7.8 is $350 million. They don't have debt, they don't have long-term investments, but they have $50 million of working capital. So if you want to have a better valuation of the company, you can subtract this working capital for the market cap, which will give you like an enterprise value of $300 million. Over the last 4 quarters, they generate $6 million, but also they had to, let's say, spend also money on the capex, which is between 2 million, and then also the depreciation is considered as 4 million. So I get basically a free cash flow of $2 million, which give me, if I divide it by the EV value, 0.5% yield return. This is not very exciting. It's very, very low. But bear with me. If I consider just the result from the last quarter and multiply by 4 the earning, I would get a $10 million earning. If I subtract depreciation, I end up with a free cash flow of $5 million, which gives me a 1.8% return if I divide by this $300 million of EV. Also, what I like to look at is if I remove all the R&D expenses basically that are spent for further growth, which basically they spend $19 million every year, I will end up with a free cash flow of $24 million, which will give me an 8% yield return. So here it's quite interesting. Basically, is that if they really stop R&D right now, the company will be a very interesting yield return option. Okay. Now let's look at the price metrics. This is interesting to see basically if the company can be really undervalued or overvalued. This is something that gives you also like a ground basis, like a ground value for a company. It cannot go below a certain point. And for a company that generates 48% gross margin, EV to sales usually of 2.1 here is quite low. So I would say that the company is slightly undervalued, at least for this price metric values. Okay. So also what you need to look at is the price to cash, which is 7.7. It's less than 10, so I consider the company as like having a lot of liquidity and possibly they can use for further M&A if necessary. Also, what I can see here is no dilution for the last year. Regarding the gross margin, operating margin, net margin, we already talked about it in the income statement. The only thing that I don't like in this section is basically the operating revenue per employee, which is very low, $27,000 per year per employee. So this is something I don't. I'm a bit surprised about for such a company that have an operating leverage. I know they have a lot of employees in India, So maybe the cost of labor is a little bit lower than, for example, in US where they sell the product. But the most important thing here is to look at this operating leverage. How do you identify an operating leverage apart from the trends that I showed you on the last slides? Is basically to look at the gross profit growth over the last 3 years and also the OPEX growth, which includes SG&A and R&D. And as you can see, the company is not growing like amazingly like 100% growth year over year or something over the last 3 years. It's like a very slow, let's say, growing company, but very wise in terms of OPEX spending. And this is what I really like, is don't look necessarily at the hyper growth company, but look at the growth company with a lower OPEX growth. And this is exactly what Majesco is doing right now, is a very controlled growth with a very controlled OPEX spending. And this is for me the most, let's say, the gem of this company. This is their operating leverage. So now let's look at the conclusion, sharing the pros and cons of the company. First point is, as you could see in the previous slide, the solid balance sheet, no long-term debt, a lot of liquidity and a good working capital. They have also the good operating leverage that I was sharing with you. A low valuation in terms of EV to sales. Also, Insurtech has a lot of room, let's say, to grow, to expand in terms of, let's say, cloud company, API, and let's say like a 2.0 industry. Also, the company has been recognized by its peers in the Gartner, let's say, study as a leader with two of other peers, which gives me like confidence in terms of like investing in such company. They have also a large customer base that I was sharing with you in the first slides, and also they did an acquisition this quarter, which called Inspro, and that will bring more, let's say, customers from the LNA industry, so life insurance. So that's an extract from their press release. So basically they emphasize regarding the fact that they will have more customers on the LNA cloud platform. The only cons that I see is at the moment, this is the fact that they have very low operating revenue per employee. So I would hope that like when they finalize all this research and development and they have like a strong product, I would like to see this operating revenue per employee increase a little bit more. And also, I don't know really what could be the headwind regarding the COVID. Maybe signing new contracts would be a little bit slower. But yeah, that's the only cons that I identify for the company. But yeah, that's the final conclusion of my analysis, is that this company has everything to grow even more and to generate more free cash flow. Just be aware that this free cash flow generation can kick in very quickly. So I believe that with this low valuation of EV to sales of 2.1, definitely the company, if it generates, let's say, twice more free cash flow, the company could definitely double also. So this is my analysis. I'm not a financial advisor, so just consider it as just pure entertainment. But basically, let's keep an eye on this company over the next quarter. It will be an interesting bet. If you have any other comments regarding this company or other companies that you would like to get analyzed, just let me know in the comments below and I will answer you. Have a nice weekend, guys, and then see you next time for another episode. Bye bye.